Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is still holding its range breakout above 100,000. And we have seen the same thing play out over and over again this cycle. And that's that every single time Bitcoin has had a confirmed breakout out of a trading range, it has not looked back and gone back below that level on the following correction. Every single time it broke out, that level was never breached after the fact, at least in this cycle. Maybe it does in a future bear market, and I don't expect this time to be any different. Now, I know there's a lot of people out there trying to short the market here and calling for this to be a trap or a false breakout like the previous two we saw above 100K. But there's two main reasons why I think that's very unlikely. For one, these false breakouts tend to be very quick and tend to spend very little time above the resistance level once they get above it. And that's how you can know with quite a bit of confidence that it is in fact a false breakout. Whereas these confirmed breakouts are done on huge green candles that close well above that previous range high, confirming that this is in fact a breakout. And if this was in fact bearish, and if in fact sellers had control, Bitcoin should have no business spending this long above 100K, just like it had no business getting above 80,000 if the 70K breakout was a fake out, and it had no business getting all the way to almost 50K when we broke out above the 45K range high. And I don't think this one is going to be any different because the bulls show that they're in control and the weekly candle closes way above that previous range high. We also have a lot of investors getting excited about the looming Bitcoin golden cross, which is when this orange 50-day moving average crosses above the gray 200-day. And this is a signal that I know is very popular because it's very easy to understand. And the first indicator new investors learn about is moving averages, but I tend to ignore this signal the same way I was buying and ignoring the death cross in April because it is a lagging indicator. If you sold Bitcoin when the price was already 30% down because of the looming death cross, you sold very close to the bottom, just like the people that sold in August of 2024 because of the death cross when prices were already over 30% down, and they sold the bottom as well. Same thing for the people that sold in about September of 2023 because of the death cross. Prices were roughly down 22%, and the death cross actually ended up marking the bottom there as well. And you'll notice that because the death cross is a lagging indicator, it tends to happen when the market is already quite fearful, and golden crosses tend to occur once the market has already rallied for quite a while and investors are already quite greedy. If you were to wait for this golden cross to buy, you would have missed the first 45% of this rally before feeling comfortable buying, just like the people that bought the past golden cross waited until price was about 40% off of the low. And same thing for the golden cross buyers before that. Because it's a lagging indicator, you miss a huge portion of the rally by waiting for that signal, because by then market sentiment has already flipped back to greed. Many investors have already FOMO'd back in, and the narratives are back to being bullish. It's great to see that Bitcoin is getting very close to entering price discovery here, especially because we've already seen our highest weekly close ever, as well as our highest daily close. And that's exactly why Monday's free weekly report was called So Close. Because Bitcoin has had a clean break above 100K, that leaves just one level for Bitcoin to enter price discovery, and that is our range high at 109K. So there are no portfolio changes for me this week. I'm happy to take small profits along the way because of the aggressive dip buying that we did during all of the uncertainty and fear during the tariff drama. So I'll just continue to follow my system and take small profits and try to keep my FOMO under control as all of these narratives get more and more bullish, as price rallies, and as everyone starts to lose control of their emotions. If you'd like to learn more about my profit-taking system or mental models I use to navigate this market, you can check that out in the video description. I finally added a testimonial wall and updated the portfolio system demo video if you're interested. But as we look forward, it's hard not to be bullish Bitcoin here with the confirmed trading range breakout that we're witnessing alongside the confirmed golden cross and the pretty decent track record they have had this cycle and the rallies that have come after the previous golden crosses, not to mention Bitcoin's relationship with the global liquidity index and how it seems to be following it with a lag once again, just like it has done this entire cycle so far. So my base case remains that Bitcoin is going to see a rally into price discovery within the next few weeks. I am open to it entering another consolidation period and taking longer before putting in that rally. But my base case is that a breakout here will trigger a ton of FOMO and a lot of people will pile in and chase price, leading Bitcoin to rally a lot higher in the short term. We continue to see strong demand for Bitcoin from investors with these solid spot ETF inflows. We also see open interest for Bitcoin hitting a new record high. Now, part of this is a function of price hitting new highs, and this is something that we've seen with every new high Bitcoin has made this cycle, but we're also seeing pretty solid announcements from various firms buying the Bitcoin ETF and adding it to their balance sheet. For example, Blackstone bought $1 million worth of the Bitcoin ETF, and this is not to be confused with BlackRock. Blackstone is the largest alternative asset manager in the world with more than $1 trillion in AUM. And although $1 million is a drop in the bucket, and if anything, it's doing more for marketing than it's really going to move the needle for their asset performance. But as the largest alternative asset manager in the world, them adding some spot Bitcoin and dipping their toes in is really a clear sign of how far this asset has come and the fact that now these major institutions with very reputable brands are comfortable buying it and adding it to their balance sheet. So we'll see what happens, but now that Bitcoin has made a new high, it is time to retire this chart and it has served us very, very well. We ended up being right in thinking it was likely Bitcoin would go below 90K, and we also ended up being correct in being prepared for the possibility that Bitcoin would trade below 80,000, but we were correct in assuming that it was unlikely that everybody's price target of 60K Bitcoin would get hit because the market structure just was not calling for that, and it felt like the bull market was still intact. We are still seeing many investors trying to short the market with over $3 billion in open short positions, and those can get liquidated quite fast if Bitcoin gets above 110,000. Strategy continues to buy more and more Bitcoin. They announced that they bought another 7,390 last week, but what's concerning is their cost basis is starting to rise quite quickly. And although this probably won't become an issue until the next bear market, this is just a result of when Saylor is able to raise debt to buy more Bitcoin. Nobody wants to buy MicroStrategy and give Saylor equity to buy Bitcoin during bear markets when Bitcoin's price is going down. So all of the aggressive buying is done at high prices because that's when the debt can be issued at the best rates and he can buy into the momentum that Bitcoin is generating with its rally. And a lot of companies globally are noticing and copying the playbook. This really feels like the beginning of a bubble to me, where you have these random pharma companies, random restaurants deciding that they're going to start putting Bitcoin on their balance sheets, even though Bitcoin is a very volatile asset. I mean, imagine your company's savings going down 30% in a month just to go back up 50% a few months later. I know nobody wants to talk about this stuff because all everybody cares about is number go up, but I do think this will end poorly eventually. I just think Bitcoin can go a lot higher before that actually happens as everybody chases the price higher and higher and as this rally gains more and more momentum. But as of where I consider Bitcoin this cycle, I do think it's quite expensive in relation to its 200-week moving average, which is the level that it tends to mean revert to every few years or so. And these companies are just piling into 100K Bitcoin. And I don't know how that's going to look for their stock price when we enter our next major drawdown or our next extended bear market, where price just keeps going down and nobody wants Bitcoin exposure, but we will cross that bridge once we get there. For now, I think this bubble can get a lot crazier before it turns around, and I do think it's likely we see Bitcoin above 120K within the next month or so, as long as we maintain this structure and momentum. And speaking of structure and momentum, the global liquidity index is continuing to go sideways here. We're still trying to figure out if this is the start of a new downtrend or if it's going to continue its uptrend higher. It's still maintaining its macro breakout, which is the most important factor. And of course, a lot of that is going to depend on the US dollar index. We have to see if this is a higher low before it rallies higher, which would put global liquidity index into a downtrend. But if the US dollar index does break down here, and that was just a brief mean reversion bounce, then we would expect global liquidity to continue its uptrend higher, and that'll be a good tailwind for Bitcoin. A lot of that is going to depend on the data and what the Fed decides to do. We still have inflation headed in the right direction. Growth is still around the Fed's target at 2%, and we have the labor market slowly weakening. So the Fed is facing more and more pressure to start cutting rates sooner and slow down or even end QT altogether. And I believe risk assets like the S&P 500 and Bitcoin know this, and they're pricing in that incoming liquidity from the Fed stopping QT and the Fed cutting rates sometime soon, because markets are forward looking and they tend to price in these expectations quite quickly. But we are seeing some other bullish developments. You guys know how much I talk about stablecoin adoption. This week, Tether surpassed Germany in US Treasury holdings, and they're now holding over $111 billion of US Treasuries. That puts them among the top 20 countries in the world in US Treasury holding. And in terms of how much they purchased in 2024, they were the seventh largest buyer of US Treasuries. And this means that it's very likely we're going to get a stablecoin bill, because everybody in the government knows that we need buyers of US debt, and stablecoins seem to be the perfect use case. So I do believe all of the incentives align for this to happen. You have people globally that want US dollars that don't have access to them. You have the US government that wants to sell debt but needs more buyers. And you have the stablecoin issuers who are happy to give people access to dollars, and they just hold on to the profits that come from the US Treasuries. So I do think this has a lot of room to grow over the next few years, especially because we know how many people now are talking about the US's credit rating and the downgrade that Moody's gave them. I thought this was a non-event in terms of the questions I was receiving about it, because everybody already knew this was the case. They didn't need Moody's to tell them that the deficit was unsustainable. So it's no surprise that risk assets kind of ignored it and just shook it off, because Moody's just told the world what everybody already knows, and that's that the US has a major debt issue and it has to do something about it eventually. And the most likely path is to print their way out of it. And because of my belief in stablecoin demand and adoption, I'm quite bullish on Ethereum going forward. It's still holding right near this resistance level. And usually if you don't see a quick rejection, that resistance is eventually going to break. Same thing with the 20-week moving average on the Ethereum Bitcoin pair, hugging that resistance level and looks like it wants to break through. And then I'm also bullish on Solana because it has quite a bit of stablecoin volume as well. It's still holding above its major moving averages and our range mid. So the range high is still my next target. And we're still seeing higher highs and higher lows on the Solana Bitcoin pair. We haven't seen great performance from Solana and Ethereum over the past year, but I do think they will turn it around and get back to outperforming the NASDAQ and S&P 500 and eventually even Bitcoin once they play some catch up. But as we look forward, the federal government is still running huge deficits that are unsustainable, and we didn't need Moody's to tell us that. This deficit trend is getting worse and worse by the year, and exponential debt growth means exponential money supply growth as the government has to print their way out of it and monetize that debt. So I remain bullish assets like the S&P 500 and bullish fixed supply risk assets like Bitcoin in the meantime. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.